Hi, welcome to the Market Alert for Friday, the 10th of July 2020. So, dip buyers rescue the Nasdaq yesterday from a dreaded down day, as it says there. They don't want any down days, as we know. And then the Dow and the S&P stock slide as Biden vows to end shareholder capitalism, raise corporate tax to 28%. As he sealed his fate with this, he's going to release his infrastructure plan next week. Not the sort of thing that most people want to hear, particularly Wall Street, which could actually seal his fate. Not that I'm into politics, a political person, and but interesting to see that it may just let the Munchkin in again, Steve Mnuchin, as he's affectionately known in the industry, the computer rigger from Goldman Sachs, who got the Treasury job with Trump and has rigged the markets ever since he started his tenure in 2016. So in yesterday's trades, the market started off. Let's have a look at a few pointers before we get into anything else. We can see that in the pre-market, futures market, how they bought back into the market again, right on the DP level. Always a very important level, as you know. And then, of course, we see them do exactly the same here. They break and then they buy back in. And if you were to do a fib retracement and pullback, this is in the 78-62% area. So already the market's primed to move higher because of what you've got in the background, and that's why I always spend quite a bit of time preparing. And I've actually recorded a video that shows you what I actually do before the market opens. I don't just turn up at 2 minutes to 8 and then expect to trade. You need to know where the market is, where it's been overnight, and where it's likely to go. So we're going to fast forward through these trades, try and keep the video short, but bring to your attention the relevant information. So here we can see that we kicked off, the order was filled, and managed to get into the trade, and then prices traded up to the 200 bar moving average, which of course needs to be taken out. And then above this we've got the BRN, and over here of course you can see the selling. This is a previous selling area, so again we will need to take this out. So prices moving up and down, incredibly volatile, and I learned an invaluable lesson from this trade this morning, as you will see as we go through the trade. So here I'm currently sitting on over 30 points on this trade, and at 50p a point, and should have taken the profits at this level because we've got this selling here, and it's the first 6 minutes of the session as well, which always makes this a difficult time to trade as well. So you can see that we've gone to this level, got profits, but I didn't take it. I'm not going to tell you otherwise. I don't see the point. It's trading, and this is how we all learn. And the market came back. They just absolutely slammed it, and you can see why when you look over at this level. Prices being hit immediately. I did manage to move the stop to break even though, which you can see here. So just in case the market found support at the 200, and I was hoping it was going to then continue up to this high and break through. But unfortunately it didn't, and that's just the way it goes, and it came back and took me out just above break even. And you can see why now we've got all of this selling coming into the market. So let's move on to the second trade. Now there's something important that I want to bring to your attention. There's 2 things actually. The first is we've got that buying down at this area. We've got up and back, and then hopefully moving back to the upside there. But look at the detail here. You can see the narrowness of this bar, and the volume is as great as the previous bar, but this one has traded below the BRN, gone back, and indicates, again applying common sense and logic, if the volume is the same as the previous bar and prices are starting to move to the upside, they're likely to move higher. And that's precisely what happened here. And you see again we had a potential buy signal. Unfortunately the entry price was right on the 200 MA. Not the best of places, that's for sure. But again, hoping this time that prices would break through, and you'll see them come back, and you think, blimey, this is a good start to the day. We then had a sell signal, which I'd removed the buy side just in case we went short. But again, I can see them buying back in. The market trades sideways, and then we move back to the upside there, and you can see the sell side is cancelled. So back in the trade still on the buy side, and again you can see that the entry price there is right on that 200 MA. So if we can get anything close to this, we see the market's not breaking through, then we can just pull the trade, because it's sideways and it's not making any headway. And you can see there, as prices come back, they shoot to the downside there. So prices come down. You can see the buying there, stopping the down move. We've got the short covering of those that were short, and then prices finding support, closing back above the BRN. And then as we move along here, you will see the market then shake out and double test the market, which you'll see in just a moment. There you go. So the market comes down, retests this area with this bar, and now it's clear to move to the upside. So you'll see prices starting to trade sideways. We then get a potential buy signal, and this time we're hoping that we can drive through the scalp and also the resistance at the top there. So prices go through the entry, they go through the scalp, and they continue to move to the upside. So now it's just a matter of trailing the stop. You can see there I've drawn in the resistance to the left. I want to see if we can actually take this out. If we can, then that will be great. The market comes back. It's not closing below the 5-bar moving average. And then at when you think it's about to all end, you will see what happens next. As prices, as I've said for many years, if you can't drive through the resistance, then jump over it. And I haven't seen this for a really long time. I couldn't even tell you the last time I saw this. And I actually explained these bars the other day in the MDI volume tutorials that I did, where we would get a gapped up bar. And this is exactly what happened. We've got the high at this level, and this is a great place to exit the trade. That's for sure, because when a market gaps up like a bar gaps up like this and trades to a pivot area, then you want to think about getting out of the trade. And you'll see there, I'm out of the trade and all done. And you can see there it's a good 50 odd points in that trade, and then the market trades sideways and starts to make its way back, because that's how gapped up on the open bars, gapped up professional buying bars work. You will see prices drive up, they'll go to an area of resistance, in this case the high of the previous bar, and that's the place you want to take the profits and maximize them. Okay, let's have a look at the rest of the morning. You can see there we had a sell signal that followed. There's the high. You can see how the market came back, and then we've got the two potential weakness bars here as well. You can see them there, both low volume, but that's weakness if the market isn't moving back on high volume. And you've got the resistance there of the high, then we're going to start making our way to the downside, and that's precisely what happened. However, note here that prices have the 200 bar moving average in the way. It was a resistance over here, and once we've broken through, it can then become a support, a floor for prices. So here we are, we've gone down, we're going to hit the scalp, which you'll see in just a moment. Prices oscillate and come back up towards the BRN and the 20 bar moving average. They don't close above this, and prices reverse, and the reason is we've got low volume moving to the upside. So it's just market makers at this point. Prices come down and we hit the scalp. We get below the 200 bar moving average, but we're not closing below it. The prices aren't having it. They're just trading sideways, and this has become a floor. Now I exited this trade, and you'll see that in a moment. And the reason I got out of this was two reasons. There's no volume. There's no selling to the downside. There's no pressure. And we're sitting on the 200 bar moving average. If prices aren't breaking the scalp and they're not breaking the 200 bar moving average, then it's likely they're going to move back to the upside. And that's what I'll just draw that back in. That's exactly what we see here as prices trade in that sideways range and then eventually come out of the trade. There's no point in staying in a trade that's going nowhere. It's as simple as that. So then this takes us to a bit later in the morning. I'm looking at, or rather the afternoon. I'm having a look at the daily chart just to see what's going on. I'm getting ready for the, there we go, I'm just getting set. I'm ready for the weekly jobless claims at, you'll see them you'll see them in a second. I'm just going to fast forward. Now they moved the market up for these, and then you'll see they came out with another 1.3 million, and the market's going nowhere. And this is important. You'll see the clip in a minute of the actual headline. Up to 50 million now jobless in the US since the COVID pandemic started. So already I can see the market's not interested in the upside. This is before we even open. This is the 2:30 kickoff. But again, I'm looking to see what the market's doing, and it's stuck at the R1 level. So I'm going to fast forward through all of this. There you go. There's the 50 million Americans have now filed for first-time jobless benefits since lockdown began. So I know what's the weakness in the background with all of this, and I'm just going to fast forward through all of this. You can see the market coming back from the R1. They tried to bring it back, and then we then get the kickoff, and the kickoff is we're already short in the background. We've got a problem at the R1 level. We've got to take out the high. That was where we gapped up earlier in the day, and the prices managed to get through, but it was a sell from the off there. And prices moving lower, and look where they find support at the 200 bar moving average. And they start to come off this level. It becomes a support for a moment or two, and then we get the second shakeout there to the downside, and we see the buying coming back into the market once more. And prices trade sideways. They come back and close above the 200 bar moving average, which you'll see in just a moment, and then gave us a buy signal. We have all this weakness in the background. We've got the bad news of the 50 million now with out of job, and look where the scalp is. The scalp is at the high. Now earlier on in the morning we had a problem with the high, didn't we? That's where the market gapped up and then drove to that level. So at this level prices are going to struggle. If you're aware of these bits of information, then you can do something about the trade when you get to these points. So there we're just going through, but look at the volume. It's not massive. It is higher than the previous bar. So once again, you want to consider either taking the money at this level or locking in at break even. And you can see there the market coming back. It doesn't want to go anywhere. Again, the volume's dropping off. There is no interest in the upside in this market. And that's the idea of being able to read these bars. So I'm out of the trade. And then all of a sudden the market goes south. And then we have a selling bar. I've marked it up because it didn't quite meet the criteria for a signal, but I marked it up and went short and traded it down to the close before I had to leave to go and see a friend who unfortunately had a bereavement. So I was missing for the rest of the session, so I have no idea what happened here. Let's have a look. The market traded sideways and continued lower through to the DP level, through to the buying here. So once again, you see that buying coming in as prices move lower. Now notice through this area, even though prices are closing back above the 5 bar moving average, you can see what happens as soon as we close back through. The Dow is also moving lower, and prices just continue to the downside there where we see this support coming in. So let's wind on till 4 p.m. which won't be too far from this, I wouldn't have thought. No 52, and again the weakness continues, which I hadn't noticed, and you can see the weakness is continuing because we're not closing above the 5-bar moving average. Do we get a sign of this? We come down towards the low, and as you know, I said over the last few days, the low is really critical for these markets. You don't want to see prices going below the low, because otherwise it confirms the weakness in these markets. We've got the volume coming in there now, supporting prices, and like I say, again we get a retracement. Again, once we close back below that 5-bar moving average, I'm just looking to see if there's any major buying coming in at these bottoms before prices moved back. I've got a bit of selling there, but now we're starting to close back above the 20-bar moving average, or barely, and back to the low. So yeah, wow, I missed a good trade here this afternoon, that's for sure. Yeah, so the market then starting to follow the Dow, having again come off that low. And this is why I make these longer videos, to point out these pertinent points to you. Okay, that's it for yesterday's trade. Let's have a quick look and see what the market's been doing on the overnight and where things are likely to go during today's trading session. So let's have a look, see where we are in the bigger picture of things at the moment. We'll have a look at the Dow, and we can see that we've had this weakness all week, where prices have come off the 200-bar moving average. They've closed below the 5 and the 20-bar yesterday. Price bars are red. We're already at the 62% retracement on the overnight. Moving on to the DAX, bigger picture here, we can see that prices have taken out the low at 12,471. As I've spoken about all this week, prices closing below the previous day's low is an indication of weakness, and now we're seeing this happen on the overnight. And let's have a look at this in more detail. You can see there the low now, crucial area for the market. Will it bounce off here at 7 a.m. or do we just get a bit of a bounce and then continue to move lower? Earlier on in the evening, when the market first opened, it was good news because prices, you can see there, drove above the DP and the 200-bar moving average, the black line. You can see we had a triple top as prices then found selling and went straight through the DP and the 200-bar moving average. Again, note how these two levels are incredibly powerful, particularly the 200-bar moving average, how the market bangs its head against this level before then resuming. And now we're heading to those lows. You can see they're trying to buy in at the moment. The volume is very high, price bar is narrow, so they're trying to hold the market at this level as I record. News today, we've got a couple, PPI and core PPI. These used to be high impact news items as well, and it seems as if they've gone on a downgrade mission for the last week. So just to keep us on our toes, these are released at 1:30, which is good news because this will be out before the market actually opens. Finally, implied volatility. This is starting to pick up as well. 27.95, I think it was yesterday. I haven't got the chart here. I've updated it but forgot to include it. But we're still below the 20-bar moving average. So the option sellers getting slightly worried with the weakness, but we're below the 20-bar moving average in prices, which is why we're on the sort of amber here, where you can see price is still below the 20-bar moving average. Close above this, we'll see the implied volatility go to red. Okay, that will do it for this one and for this week until Monday morning. So let's see what happens, see if the market will hold the low where it currently is at the moment. And yeah, let's see what happens at 7 a.m. when the futures open and 8 a.m. when the cash opens. As ever, thanks for watching. See you in the next